Have you ever placed a perfectly planned trade only to feel your heart racing the moment price moves against you? Why does a small red candle feel like a life-threatening event? Why do you panic, hesitate, or close trades too early? The answer is not your strategy, it's your brain. Today we're going to break down exactly why your brain triggers fear in trading and how to control it. Your brain evolved to keep you alive, not to make you profitable. Thousands of years ago, survival meant reacting instantly to danger. A rustle in the bushes could mean a predator. Hesitation meant death. So your brain developed a powerful alarm system. At the center of this system is a small structure called the amygdala. The amygdala detects threats. When it senses danger, it activates fight or flight. In trading, your brain cannot tell the difference between a tiger and a losing trade. Loss equals danger. When fight or flight activates, your heart rate increases, adrenaline spikes, cortisol floods your system. Rational thinking shuts down. This is why you move stop losses. This is why you revenge trade. This is why you freeze. Your brain associates money with survival. Money equals food, shelter, security, status. So when your account balance drops, your brain reacts as if your survival is under threat, even if the loss is small. There's a psychological bias called loss aversion. Losses hurt about twice as much as gains feel good. That means losing $100 feels more painful than gaining $100 feels rewarding. So your brain fights to avoid losses at all costs. Because of fear, traders hold losing trades longer and close winning trades too early. This is called the disposition effect. You avoid locking in a loss but rush to lock in a small profit. It feels safe, but it destroys long-term profitability. The market is uncertain, and the human brain hates uncertainty. Your brain constantly searches for control, but trading offers none. You cannot control price. You can only control risk. The gap between expectation and reality creates stress. Fear becomes extreme when you risk too much. If one trade can ruin your week, your brain will panic every time price moves. High risk equals emotional chaos. Small risk equals mental clarity. Professionals don't eliminate fear, they manage it. They define risk before entering. They accept the possibility of loss. They risk small percentages. Their brain stays calm because survival is not threatened. You cannot stop your amygdala from firing, but you can design systems that override emotional reactions. Predefine your stop loss. Automate execution. Risk 1 to 2% per trade. Walk away after entry. Systems reduce emotional decision-making. Fear decreases with exposure. The more small controlled losses you take while following your plan, the more your brain learns, I survived. Consistency rewires emotional response. Fear in trading is not weakness, it is biology, but discipline is learned. When you understand your brain, you stop fighting emotion and start designing around it. Trading is not about eliminating fear, it's about acting correctly despite it. Your brain triggers fear to protect you, but in trading, overprotection leads to self-sabotage. Control your risk. Define your plan. Automate discipline. When survival is secure, clarity follows. And when clarity follows, consistency becomes possible. Stay disciplined. Trade rationally.